Pakistan's economic situation continued to reflect strength, except for the current account, where we continue to see that the impact of oil prices has been more than offset by the other imports and the slowdown in the exports. However, until now, if on the wholesale basis, the economic front, the news flow on the strength that points towards the strength in economy again has higher weight, because again your economic growth is increasing, inflation continues to remain in the lower range. The other leading indicators which affect the exchange rate, again leading one includes the foreign exchange reserves, which has, although being strengthened by the external borrowing, however the size of reserves gives comfort to the overall balance of payment position. And similarly, the underlying assumptions, the underlying expectations of the impetus from the continuing activity on the CPAC, which is likely to materialize in the years to come, gives confidence on the strength of economy, or again drawing from this overall environment where the inflation continues to remain low, and given the overall trend in commodity prices, jahan pe crude oil ke prices again, despite giving a run up in the short term, they are still settling around the lower levels of near $50, which again for an economy like Pakistan, which has absorbed higher oil prices of around 110 barrels per day, $110 a couple of years ago, this again is a supporting environment from the overall perspective. Again, implications for the equities continue to remain positive. Overall environment may again the overall relationship between the interest rates and the stock market performance is positive, in the sense that when there is a lower opportunity cost in terms of lower interest rate, the flow of money tend to increase towards stock markets, which again provide higher room for capital appreciation. And at this stage, again the dividend yield is very competitive relative to the overall level of interest rate. So given the backdrop of the MSCI announcement and the happenings of the global markets, including the Brexit impact, we think the net overall impact on Pakistan continues to remain positive, as we can see increased inflow from the foreign investors going forward, which can help reduce the P multiple of Pakistan's stock market with respect to the emerging markets, which again Pakistan is still trading at a discount of more than 33%, which ideally should narrow down over the period of time, and thus creates a room for upside in the stock market. Again, with the subdued inflation, interest rates are likely to remain or stabilize at near current levels. So we expect that in the short term, or at least in the 6 months period, the interest rates are likely to remain stable, with again comfortable environment. This may allow the government to consider further monetary easing going forward, provided there are no risks provided the risk to oil prices, exchange rate do not materialize or change significantly. So our advice for investors continues to remain positive for the equities. So those who are looking to take exposure should go for the pure equity fund exposures, again through Pakistan Stock Market Fund and Pakistan Islamic Stock Market Fund, which again provides exposure to the stock market, broader stock market. So for long-term investors, core equity funds, and again you can again depending on the risk appetite, balance fund and asset allocation funds also provide good exposure to stock markets. Thank you.